Ladies and gentlemen, I welcome you back to the channel. Thank you for taking some of your time out of your day to be here with me. I'm Patrick Zimmerman, and today we will be talking about the almost 9% dividend you can receive from the Dividend King Altria Group. This is the fourth stock analysis I'm doing. If you haven't seen the others on Enterprise Product Partners, Store Capital, or Innovative Industrial Properties, I urge you to go check those out. They're also dividend-paying companies, which I believe will raise the average yield in your portfolio and have a safe dividend for the future. Also, don't forget to subscribe to the channel, turn on the notifications, and leave a like if you enjoyed today's video. Without further ado, let's jump into the company Altria Group.
Skies are clearing up.
As of today, they are currently trading at $40.33, with a 52-week high of $51.78 and a 52-week low of $30.95. They also have a market cap of almost $75 billion and a PE ratio of just above 105. Now, the PE ratio, price per earnings ratio, can be calculated by taking the price per share, in this case $40.33, and dividing it by the earnings per share, which is 0.38 in this example. 105 for a PE ratio is insanely high. I generally feel more comfortable with a PE ratio of around 10, up to 15 and 20 is fine, but over 100 is definitely something to take note of. This is most likely because Altria Group has such little earnings per share currently. They are a consumer defensive stock which makes tobacco products, cigarettes, smokeless tobacco, and a variety of other things. Because these products aren't a necessity in someone's day-to-day life, they are generally the first to get cut out of someone's spending habits if money's a little tight. Obviously, as a result of the coronavirus lately, money has been tight, so I believe that to be one of the reasons why the earnings per share dropped. Another big reason is that as of late, the past 5 years, we've seen a big shift away from cigarettes. Granted, there has been a shift to tobacco-less products such as vapes and smokeless tobacco-less nicotine products. As we dive deeper in the company today, we will be looking at examples of how Altria Group is starting to shift their focus more to these products, but a big portion of their business still comes from those tobacco products which people are beginning to wean off of. So here's the 1-year chart. They are currently trading at minus 16% on the year and about minus 22% from those 52-week highs. Although the share price is currently trading at about a fifth less than it has been at the highest point of the year, obviously before March, that does leave some room for upward movement in the future. Altria currently has a dividend yield of 8.71%, which is an annual payout per share of $3.44. Their payout ratio is just above 79%, which is indeed a little too high. This is the percentage of annual earnings which the company uses to pay out to their shareholders as dividends. And I generally like a payout ratio of 65 or below. That way, the company has a vast majority of room to continue to grow their dividend in the future. The 5-year growth rate of the dividend is 10.4%. I generally like to look for 5 to 10-year growth rates of above 10% and consecutive dividend growth of 51 years. Here are some comments which Altria has made in regard to their dividends. They believe that their balance sheet is very strong and the tobacco business is highly cash generative. In addition, their long-term objective is to reach a payout ratio of 80%. So as you can see, we just discussed they have a payout ratio of 79%. They're just about to hit that 80%. Which means in order to continue to increase their dividend in the future, they either have to exceed this 80% mark or reduce that payout ratio without dropping their dividend yield. I uploaded a video a couple days ago about Altria's current odd lot offer, which is a buyback program. I believe one of the reasons they are currently offering this buyback program, I believe it takes place on the 23rd of November, is to purchase back some of their shares from the shareholders in an attempt to decrease that payout ratio and give them more room to grow the dividend in the future. Buyback programs like these, especially from a stable company like Altria Group, the stock price can also be subject to increase in the future. This is because they do not need to pay out so many dividends, which will not only decrease that payout ratio, but it will also help the company retain more money, which can open up different possibilities and avenues for future growth. Here are the dividend payments per quarter from the last 10 years. You can see a steady increase there. They've actually been increasing for the past 51 years, but I figured it would be more beneficial just to look at the 10-year chart. Before we get into the numbers of the company and some of their business strategies in the future, I want to remind you guys to like and subscribe to the channel. Also, leave me a comment down below on how you think Altria Group will do in the future, or some other stocks that you would like me to dive into. In this photo, we are looking at the price per book ratio, which is currently 23.39. That compares the price of the stock against the book value or intrinsic value of the company. You generally want to see a price to book ratio of below 1 because this means that the book value of the company is worth more than the shares. In this instance, with the price to book ratio of 23.39, that is way too high, and it means that the company is currently trading at a vast premium. This isn't necessarily a reason not to invest because Altria Group pays out such a high stable dividend of just below 9%. They are in no way a growth company. They've been here and established for multiple years, but it is something to think about before giving them your money as an investment. In addition to that high price to book ratio, their profit margins are only 3.56%. And their return on equity is just above 10%. The profit margin's at 3.56. Also, this is much too low. We would like to see that much higher, between 15 and 20%. With that being said, the return on equity of 10.3% isn't the end of the world. It's not that bad. Could be a little higher, but I'll take 10% here. Another ratio we can look at is on the balance sheet. This is the current ratio. The current ratio is the ratio of the company's assets against their liabilities. And a current ratio below 1 means that the company currently has more liabilities than assets, which in turn essentially means that they have more money going out as a result of their liabilities than they are subject to receive from their assets. Some other things that are important on the balance sheet are the total cash, which is $4.12 billion, and unfortunately the total debt towers over that at $29.26 billion. I believe this is one of the reasons that that price per book ratio is so high. They need about 7 times more cash than they currently have in order to cover that debt, and currently they just do not have the earnings and assets in order to do so. With all that being said, I know we just talked about like 4 things which aren't necessarily favorable in the future. The analyst price target is currently at $47.46. This does mean that there's a little room for an increased share price in the future, but only time will tell if we reach that or hopefully surpass it. Now we're going to jump into a little bit how the company is managing their separate products, and then I will give you my final thoughts on Altria Group so you can make a well-educated decision on how to handle either the shares you hold or the shares you're looking to buy in the future. So for the smokable product segment of the business, and from Q3 year over year, they are up 9.9%, and for the first 3 quarters year over year, they are up 10.5%. Comprehensive income does not only mean the money that they receive from selling, in this case, smokable products, but it also factors in the expenses, gains, and losses which may not have been realized yet. Another huge portion of their business, oral tobacco. Altria Group is currently the leader by quite a large margin of the oral tobacco industry at 49.9%. This comes from their 2 separate brands, both Skoal and Copenhagen. I believe this is important to touch on because they have well-established business with their oral tobacco products, and one of the things we are going to look at next is their tobacco-free oral nicotine products, which I believe is somewhere that Altria will be able to succeed in the future. Here is Altria Group's 10-year vision on how they want to transition their company as tobacco use continues to become more taboo. Not only do they want to lead the industry in preventing underage use of adult products, they also want to expand their portfolio of FDA-authorized non-combustible products and actively attempt to convert adult smokers to said product. On is Altria's tobacco-less nicotine pouch, and you can see from this time last year, they are currently in 47,000 more stores. Just from last quarter, they've increased the number of stores they've been in by 16,000. I believe these tobacco-less products will be the future of companies such as Altria Group and Philip Morris. And Altria's ability to continue to get their on product into tens of thousands of different stores in just 1 year shows that in the future they may have the ability to lead the industry in the tobacco-less market. Don't forget to subscribe to the channel and hit that like button. Let me know what you thought about the video and Altria as a whole. Sum everything up here, Altria definitely has some positives and negatives. They're just about at that 9% dividend yield. Although their payout ratio is creeping up towards 80%, I believe that this will be reduced once the odd lot buyback goes through. If you haven't seen my video on odd lot offers or you don't know exactly what they are, I urge you to check that out. Some negative things about the company: that insanely high PE ratio, which isn't generally all bad. That gives us some forward-thinking knowledge that the earnings per share are due to increase. Their price-to-book ratio value is much too high, and they really need to increase their cash on hand or decrease the debt they're in before I would feel comfortable taking a sizable position in them. When it comes to investing in Altria Group, it really depends on what you're looking for. They've been an established company for almost half a century now, and you're not going to see large swings in their share price. Instead, this is a classic value stock, which you are essentially just going to hold in order to receive those dividend payments from them. If you think that they will be able to continue to increase their earnings over time with this new tobacco-less future, and in turn have the ability to continue to raise their dividend and keep that payout ratio down, I think this is a good investment for you. Don't forget to like the video, subscribe, hit the notification bell, and share. Leave me a comment down below if you have any questions or letting me know how you plan to proceed with Altria as an investment. As always, I'm Patrick Zimmerman. Thank you for your time, and have a nice day.